Welcome back, everybody. Mortgage rates tumbled to a record low. Freddie Mac reporting the 15-year fixed rate is now just 2.56%. That's incredible. So in today's Take Charge Consumer Protection segment, I wanted to tell you how you can benefit from these amazing rates. You may think you can't afford to switch to a 15-year. Maybe you can if you're planning on refinancing. Joining me now, Kendra Todd, real estate expert, CEO of the Kendra Todd Group. Kendra, welcome back.
Thanks, Jamie.
You know what I try to do in these segments? I try to help people save money, and mortgages can be a little intimidating for folks. I want them to understand the right questions to ask. First of all, what do you think about these rates? Have we ever seen them before?
Now, this is a new all-time low for the 15-year mortgage. And, you know, the viewers might be thinking, what's so new and noteworthy about a 15-year mortgage? It's been around forever. Well, here's what's exciting. Right now, you have nearly a 1 percentage point rate spread between a 15 and a 30-year fixed. What this means is that you have a whole group of homeowners who are in 30-year fixed mortgages right now at 5% or higher, who, if they refinance into a 15-year mortgage, they might even be able to get a lower mortgage payment, pay their property off in half the time, and save tens of thousands of dollars in interest.
And that's really the key that I wanted to point out to folks is a 15-year is often not affordable because the payments every month are more. But if you think about it over time, the extra 15 years of interest can have you not paying any principal off for the first 10 years. So
that's exactly right.
At what year should you be considering converting from the 30-year you went into to save money to this all-time low 15-year rate?
Yeah. Well, typically, a 15-year mortgage is going to double your mortgage payment in comparison to a 30-year. The people that are going to benefit from refinancing right now into a 15-year are those who have about 30% equity in their properties. And if they refinance into that 15-year, they can save about $72,000 in interest for every $100,000 of their loan amount. That is a staggering amount of savings.
And staggering amount of savings, it sounds like you'll be able to buy a second home.
Yeah, exactly. And, you know, this is a great opportunity for people who have a second home or even an investment property to think about refinancing those into a 15-year as well.
How tough, though, are the banks when you 15-year? Are the underwriting requirements for someone who qualifies for a 15-year the same as a homeowner who, let's say, puts 10% or 15%, or if they can make the 20% and not have that private mortgage insurance situation? Is it tougher to get a 15-year?
It's not tougher to get a 15-year mortgage. You do have to have cash in the bank, though, because you're going to be dealing with lower loan-to-value ratios, which means you have to put more money down. So you just have to have that on your side. However, I don't want people who are watching the show right now and cannot get into a 15-year mortgage to feel discouraged. There is a trick. There is a way that you can actually reduce the term of a 30-year mortgage. And it's through something called a biweekly payment. And it's very simple, folks. All you have to do is pay one additional mortgage payment per year, and you can actually pay off a 30-year loan in 22 to 24 years.
That's true. You know what? The banks hate you right now because you just took money out of their pocket. But that is an age-old trick. You make that one extra payment a year, and you cut the term of your loan down. This is great. And don't forget, folks, you don't have to refinance the entire balance of your mortgage. Maybe you could split it up and refinance a portion. Kendra, this is great. You definitely help folks. Thank you for being part of my Take Charge Consumer Protection segment. Eric?
Jamie, good information. We all can benefit.
Thanks, Eric.
Well, coming up, we'll have